Hey everyone, hope you guys are doing really well today. All right, so today we're going to be taking a look at two of the strategies which is used in DeFi option vaults. Okay, nothing but DOVs. Okay, so one of the strategies is cash secured put and covered call. Okay, these are the two strategies that's being used currently within the vaults. Okay, and let's take a look into some of the information. I was looking a lot more to understand how it works and so on and so forth. But like if you go to Google, and this is the reason why we need to actually learn this information right now, and why we need to actually be well informed and also an expert in DeFi option vaults. Okay, because this is one of the key features which is going to scale DeFi, and it's proven to work in the TradFi system, the traditional finance field. So, and they're bringing such innovative strategies into DeFi as well. Okay, but let's as you can see, I'm like searching on incognito on Google, and if I type like DeFi option vaults, and if I search Control F, like you don't see a lot of information over here. Just see the first page, there's hardly any information over here. Okay, these are all yeah, people are discussing on Reddit, of course, and but there, like as you see over here, here's my video, which I just mentioned that we have explained this in full detail, why it is the future of DeFi, benefits, and so on and so forth in a bit more detail. So please go ahead and watch this video after this video. I'll also link it, so you know where to go exactly. But anyways, I couldn't find a lot of information based on this, and that's why. What does this mean, basically? What does this mean? What does this tell you? Actually, it tells me that we are early. We are early into something that a lot of people are probably not paying a lot of attention to or not covering, but there are people who are doing this, like I've seen like hedge funds and all of these big investment companies like venture capitalist companies, all these capital and fund managing companies of crypto or digital assets who invest in the space. They are actively looking into this because this is like massively, it just simplifies everything, it just simplifies everything, and it just gets you like much more sustainable yield. Okay, and not just they can do it, now you can do it, we can do it, everybody can do it, anyone with an internet connection can do it, so that, and it's pretty simple, but we're just going to be in this discussion, we're just going to be well informed about two of the strategies that you're using right now. Okay, in the future they are going to add different other strategies and much more complicated strategies to generate more yield and so on and so forth, but that's fine. But I'll keep pace with that, and you're subscribed to this channel, you watch this channel, and I'll keep you posted on that for sure. Okay, but let's take a look into the six agenda topics that I have, okay, over here. So as you can see, we are going to just touch on what is DOVs. We're going to look at like what's options. We're going to look at why DOVs are the future of DeFi. We're going to take a look with examples, a look at like what is covered call, what is cash secure put strategy in DOVs, and we're also going to look at some of my like thoughts, what I think of this. Okay, but anyways, let's jump in, and I would also love to know your thoughts and what's your progress going on with DeFi option vaults, if you're already in it, and if this is the first time that you're hearing about. But anyways, just feel free to share your information in the comments. But let's jump in. What's DOVs? Okay, what's DOVs? Full form of DOVs is DeFi option vaults. Okay, DeFi stands for decentralized finance. Options, options. Options is it's a derivative, and vaults is like a place where you can actually people keep their funds or like some valuable things. Okay, so it's the same concept, but and as you can tell from the name itself, it's related to DeFi, of course, and it's related to options market, and it's related to something where you can save or where you can invest or where you can put your assets in vaults. Okay, but now if you're new to the finance and digital asset space like crypto, you'll be like, what's options, and if you're not a trader, you'll be like, what's options? But if you're not aware, just understand that it's a derivative, or it's like a betting contract, okay, which is referenced to an underlying asset. What do I mean by that? Okay, let's say Bitcoin. Okay, Bitcoin is trading around like let's say 47,000 right now dollars, and you say, hey Jimmy, in 1 month Bitcoin is going to be trading in above 50,000. I say, hey, probably no, I think it'll be around like 47,000. Okay, and you say, okay, let's have a bet. Okay, I say, okay, let's do it. So we create a bet based on the price of Bitcoin. And like we already selected a time frame that is like, hey, in 1 month, the price is going to be so and so much. And we agree on that in 1 month. Okay. And also, like, say this option, this is like a contract between you and I. Now we can actually sell the contract. Let's say if you want to sell me that contract, you can sell it to me, and I'll say, hey, look, if I win this bet, I'm going to buy Bitcoin from you at $47,000, even if the price goes to like $50,000. So I'm profiting from that trade. So this is basically what it is in general, okay, as an example. But it's like a contract, a betting contract on top of like, an underlying asset as a reference. Okay, you can take any asset, not just Bitcoin, but any assets. It's traditional finance. You can take like different stocks and so on and so forth, and so on and so forth. But this is basically just to, make the market more liquid, and give different options to like, investors or speculators or traders and so on and so forth. Okay, and market makers, and so on and so forth. There are a lot of different participants. But anyways, how would someone define it? A so derivatives are, an option. It's a financial instrument. Okay, it's like it's a financial tool or an instrument which allows a buyer to buy or sell an asset at a given price within a certain time period. So think of the example, the Bitcoin and the contract example that I gave you. Okay, so you have a contract and it's at a given price. So I'm buying that contract from you, that options contract. I say like, hey, this is the price I'm going to buy in 1 month, and I can buy it and I can sell it again. So basically, and within a certain time period, as you have seen, like in 1 month. So the key point here is three things. Okay, it's like it allows the buyer to buy or sell an asset. So that is one key point. It allows the buyer. Okay, they are not obliged to do it. It's an option. So that's why it's called like an option. Okay, they have an option. It's not mandatory for them. Okay, so and at a given price, at a specific price, so the contract will know like, hey, at this price, I'll give you a different example, like different practical examples in DOVs later when I show you some screenshots of some strategies which are deployed in live. And also the third thing is time period. So these are three critical things in an options, I would say. Okay, so why DOVs are the future of DeFi? You have discussed it in like a lot of detail. Okay, as I've shown you in the beginning, that go Google like DeFi Option Vaults in Google, you'll find my video. Go and watch this. And if you want to, if you don't like clicking on any YouTube links or something on a slide, you can just Google it. If not, like I've included it in the slides, and I'll share it within the description as well, so you can do either way. Okay. But anyways, let's understand why it is the future. Okay, in just a snapshot. So basically, it's this options, DeFi option vaults. They're basically related to the price action of an asset. Okay, so whether it be bull market or bear market, there's always a price to an asset. Okay, so it depends on that. That is the primary source of how they generate yield. Okay, so and also these vaults where people go and deposit their money and deposit their funds or capital. It's automated. It's very automated. Anybody can do it. Anybody can do it. It's just like clicking buttons. Okay. But the point here is like, you get exposure to different market without even having to know that market in details, or you don't have to be an expert in that market. As always keep telling, you don't need to be an expert, to do DeFi option vaults. You just need to be well informed, and that is exactly what we're here to do. And that is what we are learning, the concepts and how it actually works. Okay, in just the broader sense. Okay, you don't have to dive deep a lot. Just have to understand the concept with different examples. All right, coming back to like the the props of why this is going to be this is what key thing in DeFi's future. It's going to make DeFi sustainable and scalable. Why? Because it's going to make the market more liquid. And this is these all strategies like covered call strategy, cash secure put strategy. These are all like you deposit your capital over there and you set and you forget it. Okay, you don't need to actively like check every day or something. If you want, you can go ahead and do that. But like, of course, like I assume like you guys, everyone's like busy and working, and they have their own thing. They have a life, So basically, it's like a set and forget sort of a strategy, and it's very simple for anyone to do. Okay. All right. So I mentioned go watch this video after this video. Anyways, I'll link it in the description. I'll share it within the description as well. But anyways. Coming to the two DOV strategies that are deployed right now. So these are the two common strategies which are done right now. Okay, but in the future, they will have much more complex strategies, and we can learn more based on that. And since you're already subscribed to the channel, you follow and you watch my videos, you will be informed about this because I'll be actively researching every bit of DOVs. Anyways, um, so, so first, so as you can see over here, BTC covered call, and you'll see something like USDC Sol put selling. Okay, it's nothing but cash secured put. But let's jump into like just let's try to first understand like, hey, what are the benefits or what's the props of these two strategies? Okay, in general, okay, there are a lot of props, but just to if you had to highlight it, let's say covered call is like when do you actually want to use a covered call? Covered call is like when you actually have the intention to grow your long-term volatile asset. Okay, what do I mean by this? Let's say you hold Bitcoin, or let's say you hold Solana, or let's say you hold Ethereum, whatever asset you hold, a volatile asset, not a stable coin. Okay, so you can deposit this asset into a vault and you can grow it over time. You can grow like the amount. Let's say you have one Bitcoin, you deposit that into a vault in a covered BTC covered call vault. So you get APY or interest or yield like every week or whatever is the time period of the epoch of each strategy. Okay, but generally it's a week, 7 days. Okay, so maybe next week you will your value of that Bitcoin, if you win that thing, it'll be 1.019 something, and the next week it'll be 1.02 something. So you will grow the value of your BTC. Okay, that's the whole purpose. And basically, covered call also it limits a lot of the upside to it. I'll explain you exactly with a detailed, example in just a bit. But just to understand, it limits your upside. There is a limit to the upside in covered call. Now let's look at cash secured put. Cash secured put is basically when you have the intention to grow your stablecoin stash. Okay, in DeFi, like you always like in digital asset investing in general or speculating in general, it's you always have some stablecoin, in the sidelines, like USDC or something like that, to use it for whatever new opportunities come up. Not like every opportunity, but like some of the ones which is researched and like you're well informed and you have high conviction in that and you really want to speculate on that or NFT or whatever. Okay, so basically, cash secured put is like when you have the intention to grow your stablecoin stash. So covered call, as I mentioned, it's a to grow your long-term volatile asset. You want to hold it long-term and you want to grow this asset and you want to gain more of this asset. But in cash secured put is you want to grow your like stablecoin, which is nothing but like dollars, let's say for now. But there's euros and stuff like that, which will come later. But cash secured puts is basically it's you're trying to hedge the downside. Okay, so basically, um, like I'll explain you with an example in just a bit. So you're hedging the downside. You're limiting your losses just to make it simpler. Okay. All right, so now let's take a look into covered call strategy in depth. Okay, like in depth in the sense a broader picture. You don't have to actually understand how all the mechanics actually all works. Yeah, you have to be well informed about that because all these mechanics and all these operations are done by the DOVs. Okay, are done by the DeFi Option Vault itself. So that's why I mentioned the benefit is like it's all automated, set and forget, and it's very simple. Covered call strategy. Here, we'll take an example of like BTC covered call, just to make it simple. So basically, as we have mentioned, an option is just a bet. So in this case, a bet that BTC price won't be above the strike price. Okay, covered call strategy means like BTC is just an asset over here. It could be Solana, it could be Ethereum, ETH, or whatever, any asset that is there. But in this example, it's BTC. Okay, so it's a bet between two parties that the BTC, the price of Bitcoin won't be above a certain strike price. Okay, so let's say, as I mentioned, like you took 50,000 as like a price in 1 month. I took like 47,000, and I say, hey, it will not go above that. So that is a covered call strategy. Okay, and it's a conservative strategy, and it's relatively mildly bullish. You're bullish on Bitcoin, you're bullish on the whole market as an outlook, but you don't think that it's going to explode. You don't think the market is going to explode in like 1 week, like 100% or like 200% or like 50% even. Okay, you expect like there will be a steady growth. There'll be ups and downs, and slowly it will just keep going up. So that is when you actually use covered call strategy. Okay, you're not expecting a very like parabolic market. You're expecting a steady growth, and you're mildly bullish on that asset. Okay, so what in covered when you actually deposit your assets or your capital in deposit your asset in a covered call strategy, in this case BTC covered call, what does the DOV platform actually do? The DOV platform does all the operations for you. Okay, you just need to deposit whatever assets you have over there. And so basically the DOV platform, they sell the options. Okay, they sell options to market maker, and market maker gives them the premium, and the premium is the yield that you get. Okay, so like it holds the underlying asset, in the sense, like I mentioned, you need to deposit your BTC over there in a vault, and DOVs sell that to the market makers in the market, and they generate yield for you. Okay, so that is what basically they do. All right, now just to take an example of like, the whole strategy, as you can see, like I've given you this example previously, and just to look how it actually looks. And in another day, I'll actually deep dive into the platform itself, and I'll explain you there. But like just for the sake of simplicity and to keep everything in one place, let's take a strategy like screenshot, okay, and understand by the example that we already have. So this, as you can see, it's like a contract, okay? This is the contract terms. Okay, you have the current price of Bitcoin, which is always changing. It's always fluctuating. The strike price is fixed. That is the given price that we discussed in the beginning. Okay, so the strike price is nothing but a given price, which is a known price. It doesn't change, and you can see like the projected APY. It's an estimate that it's going to earn so much, and APY is a compounding interest over a period of a year, annual percentage yield. Okay, so, and time to expiry is nothing but like, hey, as you mentioned, like this bet that we took, like me at 47,000 BTC, you at 50,000, it expires in 1 month. So what is the price in 1 month? In this case, like, as I've mentioned to you in previously, 7 days is like what the normal DOVs they use right now. So as you can see, this is hours, minutes, and seconds. Okay, so when this expires, so the main thing you need to keep an eye on, like, hey, so right now the price of BTC is, let's say, 46,000, and you say, hey, within 87 hours, is it going to be below 54,500? If it is below 54,500 at the time when this becomes zero, you win. We win. Everyone wins. The DOV platforms win, and because the DOV platform sells the bet, or sells that option, so they win, you win, and everybody wins. So, and your stack of like BTC in that vault increases. So that's what I mentioned previously. If you put one, now let's say you have 1.01 or something like that, based on the APY, like compounded over a year. Okay, so that's how it works. So that's how it basically works. Okay, so it's actually in the best interest of the DOVs to actually select the strike price in such a way so that it's back tested in the sense like it's proven to work. And most of the strategies, what I hear from the research from the traditional finance people, and also like the people who are in crypto, like not the people like the capital funds and stuff like that, in 90% of the time, like they are the strike price that they give, it always like is successful, and the bet is won 90% of the time. Okay, so yeah, of course, like it could change something, but that's what I've learned, you know. And I'll keep you posted on like how is it going for me, in general. But yeah, generally I've explained you everything, like like what happens in a covered call strategy with an example of the strategy screenshot, snapshot of the contract. But anyways, what actually happens, what actually happens in a in a macro level, just to understand and keep us aware. You don't actually really need to know this, but it's good that you are informed about this so that you know what you're actually investing in, or you're speculating, or where you're putting your money. So it's just to make you aware. Okay, so let's say, like, okay, and this is also with the same example, BTC covered call. What happens? Okay, what happens when if the bet is lost? Let's say I lose the bet. Okay, what happens? And these are some of the risks, and you need to be aware about, and this is what it is, So there's always a risk in order to generate return. The higher the risk, the higher the return. Simple as that, you know. So if the bet is lost, that means if the contract, like let's say I'm buying, I say, hey, if I predicted like, hey, it's going to be at 47,000 and it will not go above like 50,000, and let's say it does go above 50, it goes to 51,000, okay, let's say, or 55,000. So I actually lose the bet. So I have like I may incur a potential loss in BTC terms. That means if I deposited one BTC, maybe it can be reduced to zero point 0.9 something BTC. Okay, so but the thing is that zero point 0.9 BTC will be worth more in dollar terms than the one BTC which I had previously. Okay, so you will be worth more in dollar terms, but you will lose some of your assets if you lose that bet. That is exactly what happens. That's nothing else. And if you win the bet, as I've explained, you will receive more BTC. Okay, you will receive like let's say 1.0 something, whatever, So you will get that. That's basically what happens in a covered call. You just need to know this. All right, now coming to the second strategy, which is cash secured put strategy, which is much more of a bullish strategy. It's much more bullish, much more optimistic. You're like expecting really high prices in the short term, and this is the strategy for those people. So it basically, these two strategy, it depends on like how you look at the market and what you're thinking is going to happen. So basically that. Let's say in this case, we have taken an example of like USDC Sol put selling. Okay. So basically, you deposit USDC and they're going to sell Sol puts. Okay. Now, who's going to do that? The DOVs is going to do that. You don't need to do anything. You just need to deposit USDC. Okay. So what does it basically do? It's a bet that the Sol price will always will be above the strike price at a given time period. Okay. Um, I'll show an example in just a bit. But anyways, it will like covered call is that, hey, it will always be, there will be a given price, which is the strike price, and the price you think is always going to be below that. Okay, so you're not so bullish. It will exceed that price. But in a cash secured put strategy, be whatever the asset, you're not the strike price is like below, and you're saying, hey, this is where the price will be. This is the strike price, and it will always be above the strike price. So it will not fall below the strike price. Okay, that is what you're hoping it to happen with that asset. So you're always bullish, you're always up. Even if the price moves up, the strike price keeps moving up after it expires that time period. Okay, so that is what you need to understand. And it's a much more bullish strategy. And so in this case, what do the DOV platforms do? You put USDC in there, they go ahead and sell put options based on that. Okay, and basically they hold stable coins. How do they hold stable coins? Because we deposit stable coins. Simple. Okay, now um, let's take a look at the example. I've explained you like just with my hand motions, but let's take this strategy screenshot or like a snapshot of the strategy or the contract itself. Okay, so this is what is you will have the same components. You will see the current price of Solana. You'll see the strike price. You will see a time to expiry. You will see a projected APY. Okay, so in this case, the current price of Solana is, let's say, 171, and they give you a strike price which is fixed for that time period until this resets. So basically, you're saying, hey, it's always going to be within the 90 hours of a year. It's going to remain above 150. If it does so, you're going to win the bet. You're going to win. DOV is going to win, and everybody is going to win. Okay, so it's good for everyone. And mentioned previously, it's back tested, and it's 90% of the time it wins, and or all these automated strategy, it will keep improving as we get more data, and as we explore more in DeFi, all these option markets which are coming in Solana like really hot, because like Solana is one of the chains which can actually handle all these sort of like complex trading strategies and so on and so forth. Because in the back end, like of DOVs, is nothing but options protocols like Zeta Market, Psi Options, 0, 1, and you have all these option protocols. You can go ahead and use them, but the thing is, you have to basically understand. Like, I mean, crypto market and digital asset market is 24/7. If you're trading options like in just like traditional finance market, and the market works like for 6 days, I guess. Yeah, 6 days, a week. Crypto digital market, it just works like 24/7, 365. And if you're doing options, it's like your stress level will be will go to Mars, basically. It'll be exponential. So that's why you need a simpler strategy. And of course, like not everyone is an expert in like options and so on and so forth. And all these products, DOVs, it just brings in a lot more people into the space. So that is what crypto and digital space is, digital assets is all about. It's all about including different people into this whole giant new financial and innovative system which we are creating and learning about and exploring. Nobody is an expert, so just use it and understand it yourself. And yeah, so that's what you need to do. Okay, all right, so let's take a look at like what happens. What happens, like what are the risks, let's say, and what are the benefits of this. So the example is still the same. It's a USD deposit vault for sol put selling. So if the bet is lost, what is the bet? What is the bet? The bet is that, hey, Solana price within 90 hours is going to remain above 150. If I actually if someone lose that bet, they incur a potential loss. So they incur a potential loss, and that is when their USDC will be used in order to actually yeah, the, the value of the USDC that they deposited into the vault will reduce. Okay, and if they win the bet, that means if the strike price, like I mean, if the current price of Solana within the 87 hours, if it remains above 150 at the time of close, that means the bet is won, and you receive more stable coin because of the premiums that you receive from the market makers, and also by selling the options to them. So So one case you will lose some USDC, and the other case you will gain some USDC. So it goes both ways. Okay, majority of the times it's high probability that they're going to win. You know, through DOVs. And as I've kept iterating over the presentation, that DOVs, all these automated models and like, all these algo models, trading models have always, like these are done by professionals. These vaults, Katana, Friction, Tap Finance, Chess, these are done by like experts who are already familiar with how actually options work, how to do options, how to actually use the options protocol, which is on Solana, and how to actually manually do them 24/7, 365. They are into it, and they build products on top of it, which is DOV. So these are basically what generally people call in the traditional space structured products, and you will see this term being used, structured products. So when you hear structured products, they're talking about DOVs. That's what you need to understand. But anyways, like I mentioned, just learning about it is like one thing. Just the theory is one thing, but actually going and exploring these protocols is another experience. And it's very, very simple. Trust me, it's like easy peasy. It's just like, it's easy peasy. I'll show it to you another day. We'll walk through each one of them in each of the video, and I'll show you like how easy it is. And I'm sure like you guys already like followed my previous video, like the DeFi, this video right here. Go and watch this video, and if you watch this video and play around with like those protocols, you know how easy it is, to do all of this. So this is what I wanted to share with you guys today, and I mean, like it's so interesting. Like in such short amount of time, we are able to achieve this. I'm just wondering in the next 5 years how DeFi is going to look like, and people who are aware of all of this and start to use all these protocols, let's say these are pretty new protocols, and they don't have a token or like, a token on top of it or so on and so forth. So if you go and use this, you might be eligible for an airdrop in the future when they release a token, and so on and so forth. They might be releasing a governance token or whatever token. You can get those tokens for free if you just maybe allocate some capital to any of this right now, and you set and forget it. Just don't worry about it. It's like it's the main props of these platforms are like to reduce your stress, to reduce your time that you are looking for different yields and so on and so forth. Let the professionals do what they do best, but just, I don't want to sound like a broken record, but just be aware, like, these are all smart contracts. There are risks, so always try to understand that. Do as much as research as you can, and explore this area. It's amazing. Okay. Anyways, if you like it, just if you want some more of these videos, I'll be taking a look and diving this. But if you actually don't mind, just go ahead and subscribe to the channel, like it, share your comments, share your thoughts about it, and share it with your friends. Share it with your friends, because sharing will actually improve our knowledge. Because when I actually share information with you, I learn from you when you actually comment. And if let's say, if I'm not aware of that thing, I go ahead and I do a bit more additional research on that. So I learn from you, okay? And that's my whole purpose why I'm sharing this. So it would do the same to your friend as well. Let's say you share this video with your friend, and you get the idea. I mean, they'll ask you questions and you learn, the more questions you answer, or like, the more you research and the more you practice, the better you will be. So we want to be well informed, and we want to be expert in DOVs and how to use this, how to do this, and so on and so forth. And we want to share this with people. All right. Anyways, enough talk. See you tomorrow, or see you when I see you. Okay. Have a nice day. Bye now.